Investing is one of the best things you can do with your money. However, it can be a bit difficult to get started just because there are a lot of options and decisions to make. In this video, I'm going to break down as simply as possible how you can get started investing in 2024. And I'm going to tell you exactly what I specifically do, as well as of course giving you all the information so you can make the most informed decision based on your situation. But before we get into that, I just want to briefly touch on why invest.
Hello, I like money.
What is the point in all of this? Ultimately, investing is putting your money into something to hopefully generate a return so you end up with more in the end. Generally speaking, with investing, you can make money either through appreciation if that investment goes up, or through dividends or cash flow, which is essentially regular payments that stock, for example, might pay. Or we think about it for a property, it could be through the rental income that you receive. In this video, we're talking about investing in the stock market. So appreciation is the stock market going up, and dividends are the actual cash that those companies will pay to you over the course of the year. So those are the two ways that you can make money from investing. And why invest? The ultimate goal really, in my opinion, is to build your pot up to a level where you can then live off of that, where it replaces your income, supplements your income, pays for a holiday a year. Everyone's gonna have a different goal in terms of why they want to invest, but for me, it's really building that pot up, then one day live off of it, and be financially free or financially independent. Through my personal experience, I got investing about 5 or 6 years ago, unofficially in August 2017, when I got enrolled into a workplace pension, officially in August 2018, when I started actively investing every single month my own money into my Vanguard stocks and shares ISA. After a year or so, I only had £1,000. Now, 6 years later, I've nearly got £100,000 invested, and I literally have not done anything special. All I've done is make consistent automatic investments every single month over the last 5 or 6 years, and that's exactly what I'm going to be walking you through in this video. I'm of course still a long way off of living off of my investment pot, but self-reflected and looking back now, I've been investing for about 6 years. I'm 26 years old. I've got a 93,000 portfolio. I can really see how in 10 years time, hopefully I'll have multiple six figures, and then maybe in another 10 or 20 years time, I can actually live off of that money. And that is the whole reason why I invest and the benefits of investing. And what you'll probably find is the more you dip your toe in, it is a bit nerves wracking at first, but the more you get into it, the more you invest per month, the more you're going to want to get addicted to investing and invest as much as you can. You can see the power of compound interest and the stock market and how it really can, hopefully one day, help you retire. Before we get onto the 3-step process, the last thing to touch on is compound interest. It's generally quite a misunderstood topic. I think people try and overcomplicate it. I don't really know why, but it's literally just when you earn interest on your interest, or in terms of stock market, a return on your return. If you invest this year and you make 10%, you could withdraw that 10%, but there's no then chance for that return you made in year one to make further returns. Instead, if you leave that 10% invested, that could then go on to make more returns over the years. And that essentially is compounding in action. By leaving your existing gains and returns invested and not touching them, they then have the opportunity to make more gains and returns over time.
Write that down, write that down!
I would definitely recommend you play around with a compound interest calculator. If you plug in your numbers, your time frame, how much you're investing per month, you can sort of see the impact of compound interest. And I'll tell you now for a fact, if you're investing for decades and decades, 30 plus years, which hopefully you should be as a long-term investor, most of your return will come from compound interest over time. Now, let's get into exactly how to start investing in 2024.
Okay, let's go.
And I'm gonna be going through my 3-step blueprint that I've talked about for years, but I'm gonna break it down again in this video. Step 1, choose a platform. Step 2, choose an account. Step 3, choose an actual investment. For me personally, the main way I've done this over the last 5 or 6 years, my platform has been Vanguard, my account has been stocks and shares ISA, and my investment has been a global fund, specifically the FTSE Global All Cap. That's just what I do. Want to let you know, to be transparent straight off the bat, but let me actually walk you through each step. I'll give you further information. Step 1, you need a platform to invest on, sometimes called a broker, and it's essentially just a website or an app. You might have heard of Freetrade, Trading212, Vanguard, Hargreaves Lansdown. These are all platforms or brokers that you can actually use to make investments. There are a lot of different platforms out there, especially in the UK. We're pretty spoiled for choice. Each one is slightly different and has a USP. For me personally, my favorite two are Vanguard and Trading 212. I think if you're going to be investing long term into index funds, which is what I do, then Vanguard's the way to go. If you want to dabble in individual stocks as well, then Trading 212 is the way to go. I'm going to come on to index funds and individual stocks and define those in step 3, don't worry, but that's essentially what a platform is. It's just a website or app for you to invest. Number 2, you need to choose an account, and luckily there's much less choice here. This is probably the easiest step of the 3. The best 2 accounts in the UK are a stocks and shares ISA and a pension, and a pension could either be a workplace pension or a SIP. Generally speaking, just as a rule of thumb, you want to make use of any employer matched workplace pension just out of the bat. It's literally free money your employer will give you. But assuming you're doing that already, you can then either choose to use a stocks and shares ISA or a SIP. For me personally, I prefer a stocks and shares ISA, but they both have great tax advantages. With a stocks and shares ISA, we pay tax, but once the money is inside the stocks and shares ISA, it grows tax-free forever. There's no capital gains tax and no dividend tax. It's also very flexible. You can access the money without penalty whenever you want. The main benefit for me for a stocks and shares ISA is that flexibility. If you build up that pot to an amount where you can live off of it in your 40s, you can access it straight away. The difference with a pension is a bit more unflexible, and you can't access that until further down the line. You may as well have to pay tax down the line. There are of course benefits though. You avoid tax today, so you have more money compounding over the long term, but that inflexibility of a pension is why, generally speaking, for me as a younger person, I prefer a stocks and shares ISA a little bit more, and why I try to prioritize that investment account. Of course, the best account for you is going to depend on your situation, your age, your salary, your goals. If you have any questions, let me know and I can help you out in the comments below. But one of those 2 type accounts is what you're going to want to use. The 3rd type of account is a general investment account, but unfortunately that has no tax advantages. So there are some situations where it can be useful, and it's much more niche, complicated point, so I'm not going to get into it. There are some, it can be good for certain specific people in situations, but generally speaking, you want to use an ISA or a pension first and maximize those allowances. Step number 3 is then choosing an actual investment, and this could be a fund or an individual stock. For me personally, I focus on index funds. An index is something like the FTSE 100, which is the largest 100 UK companies, or the S&P 500, which is the largest 500 US companies. It's essentially a basket of stocks that are grouped together. And the reason why it's called an index fund is called the FTSE 100, the S&P 500, that indexes. So the index fund literally buys all the stocks in that index and it just seeks to track it over time. The alternative is you can pick and invest into individual stocks in the FTSE 100 or the S&P 500 or anywhere in the world, but history data all shows it's pretty much impossible to consistently pick those best companies over the long term, which is why for me, I like to keep my approach very simple, very passive, and just automatically invest into a global index fund every single month. And that's literally all I've done for the last 6 years.
You can stop at 5 or 6 stores or just one.
And what I'll continue doing for the next 60 years. For me at this point, I have 99% of all of my stock market investments in global index funds and ETFs. The reason being, it keeps my approach so simple and just so passive and hands-off. I don't need to be picking individual stocks. I don't need to be having multiple funds and rebalancing them. I literally just have one global index fund in my stocks and shares ISA and my SIP and my workplace pension that I invest into every single month. It grows slowly over time. You don't want to get the best returns, you don't want to get the worst returns. The idea is that it generally grows slowly over time as the global stock market grows and becomes more productive and innovative. And that is how I choose to invest. And that essentially wraps up the 3-step process to actually start investing. Of course, you can have multiple platforms, you can have multiple accounts, you can have multiple investments. I actually do myself, but generally speaking, you want to be using a low fee platform like Vanguard or Trading 212, an actual useful tax advantaged account like a stocks and shares ISA or a pension, and then choose an actual investment. And for me, in literally every case, that is a global index fund. The main one that I use is the FTSE Global All Cap, which I have 100% of my stocks and shares ISA and my SIP, both with Vanguard, are in the FTSE Global All Cap. That is how to get started investing in 2024.
Just do it!
I hope this was helpful. Of course, there are some nuances, and the correct sort of decision for each step may be different based on your personal situation, your goals, your age, your salary, your time frame. There's a lot of factors to consider, but I'm hoping by making it sort of succinct in this way, you can actually just get started. Ultimately, investing in the stock market isn't like a mortgage. You're not locked in somewhere for 30 years. You can have multiple platforms, multiple accounts, multiple investments. So the best thing I'd say, get started, even with £10, £100, whatever you can afford, get your toes wet, and then over time, as you continue learning and reading more, you can adapt your investment approach based on your personal style. But that wraps up this video. Thank you very much for watching. Leave a like if you enjoyed it, and I'll see you in the next one.